Let's talk about dividend investing. Is it the ultimate path to passive income? Or is it just a way to lock in meager returns on companies that don't have a lot of growth prospects? Let's talk about both sides of that issue now. How's it going, everybody? Welcome back to the channel. My name is Jay, and as many of you know, I'm a fan of dividend investing. I have a Roth IRA that's composed mostly of dividend stocks, and right here on the channel, I've been building a portfolio from $0 to $100,000 investing in nothing but dividend stocks. But dividend stocks certainly aren't the only way you can and should be investing. And I recently came across a video by a channel called In the Money titled, "Why Dividends Suck." And in that video, he raises a lot of valid points and a lot of valid criticisms about dividend investing. But I think he also misses the mark on a lot of things too. So in this video, I'm going to try to give you the pros and the cons to dividend investing as I view them, so you can have a better, more informed picture for yourself before you decide what investing strategy is right for you. Now, the first and most common criticism of dividend stocks is that the dividends are a waste of money because by paying that dividend out to the investors, that's money the company is not using to reinvest in itself and actually grow the business. And that's a valid criticism. It's absolutely true. What a lot of new dividend investors don't think about or don't realize is that a dividend just isn't free money a company is giving you. Dividends are paid out of a company's earnings. So what a company is saying by paying out a dividend to its shareholders is that it really doesn't have a better use for that money. By paying that dividend to the investors, that money is not being used for R&D or capital improvements or a new growth acquisition or anything like that. By paying you a dividend, they're saying, we've got this cash, we don't know what else to do with it, so we're gonna give it to you. So from that point of view, yeah, I get it. A dividend is a company passing up on using that money for growth. But where that kind of misses the point is the companies that generally pay dividends. If I've got a small company in an emerging market space or a new technology or something like that, I want that company as an investor to be pouring every last dime of that company's earnings back into the company so the company can grow and expand and become a larger, more profitable company. So think about a stock like Tesla over the past 5 to 10 years. Tesla started from scratch. They had to build up their whole car manufacturing operation from the ground. So not only did they have to build factories and all the manufacturing equipment and everything that goes into building a car, they had to design their own models from scratch. And then not only did they have to do that, they had to expand and grow so they could produce all the cars that people wanted to buy. And there were a lot of growing pains early on for Tesla because they couldn't expand fast enough to meet that demand. So if a company like Tesla that is growing and expanding and trying to build their business rapidly like that was paying a dividend, that would be absolutely insane and a complete waste of that company's capital. But those aren't the kind of companies that dividend investors are investing in. The majority of dividend-paying companies are companies like 3M, or Johnson & Johnson, or Pepsi, or Coca-Cola. These are insanely large, multinational conglomerates. They're huge companies already, and they're very mature businesses. So when you think about these companies that are already hundreds and hundreds of billion dollars of market cap in size, there's not that much more room where they're going to grow. These companies are doing so much in revenue and have so much in cash flow that they can afford to both fund their growth prospects and pay their investors a dividend. It's not like if a company like Johnson & Johnson, who has been paying a dividend for about 100 years now, if they decided to stop paying their dividend tomorrow, it's not like there's anything Johnson & Johnson could do with that money to help them start growing at a 15-20% pace or whatever, like some of these smaller growth companies do. They're far too large and far too mature of a business for that. And that's where I think that criticism of dividend investing goes off the rails. So yeah, if a small growing company is paying a dividend, that's a waste of money. But when your larger, more mature companies do it, they can afford to do both. Now, the next common criticism of dividend investing and dividend stocks is taxes. When a company is paying out a dividend every quarter to you, that's a taxable event every quarter. You have to pay taxes on the dividends you receive. So the criticism is, why is this company forcing me into a capital gains event, a taxable event? And I think the rebuttal to that is the fact that dividends are probably the most tax-friendly form of income you can have. Qualified dividends, which are the most common form of dividends, are taxed at the long-term capital gains rate. And as long as you make less than $500,000 a year, which I think is probably most of us that are talking and watching this video, your dividends are taxed at a 15% rate. And if you make more than $500,000 in a year, dividends are taxed at 20%. Still, far less than your normal income tax rate. So if I were a more active trader and I was buying and selling stocks within a shorter period of time, the short-term capital gains rate that I'm going to pay on all my short-term trades is going to be much higher than that dividend rate. And if I hold a stock and I decide to sell some of my shares after a year or 2 years, the tax I'm going to pay on that sale of shares is going to be the same as that dividend rate, the long-term capital gains rate. So as a form of income, dividends are about as tax efficient as you can get. Not to mention, if you're investing in dividend stocks in an account like a Roth IRA or something like that, your dividends are totally sheltered from taxes. And this is also one of the reasons why dividend stocks are so popular among older investors and people in retirement, is because when they take their income in form of dividends, rather than, actual paid income or something like that, their income is taxed at a far lower rate. So the criticism of dividends on the tax front is really kind of misplaced when you think about it in that context. Now, another common criticism of dividend investing that I hear all the time, and is certainly the kind of criticism that has grown louder and louder in the current stock market that we're in, is that why would I invest in dividend stocks that aren't growing very fast and only paying a couple of percent in dividend when I can invest in all these growth stocks that are going up by 10, 20, 30, 40, maybe even hundreds of percent over the course of a year? And again, this is another criticism I absolutely get. Especially in a market like the one we're currently in, you can basically throw a dart at a listing of stocks and pick one that's going to make you a ton of money. But that's not always the case. And I get, people love growth stocks. I invest in some growth stocks myself. But for everyone you hear about that has made a killing investing in Tesla over the past couple of years, there are so many people that lost a lot of money investing in Nikola thinking it was the same thing. And that's something that kind of gets lost in the debate over dividend stocks, I feel. Yes, you can make a ton more return on your money by catching the next hot growth stock and riding it to the moon. But your odds of doing that are extremely slim. Now, as I said earlier with dividend stocks, dividend-paying stocks are usually much more mature companies. Coca-Cola is not going to go to zero anytime soon. Neither is Johnson & Johnson or McDonald's. Yeah, you're not going to get the rocket ship gains in any of these stocks, but you're also not taking on a lot of the risk you're taking on in a lot of these higher growth stocks. And let's not forget, it's not like you're not getting growth out of dividend stocks either. You just have to be a little more careful at the prices you're buying dividend stocks because they grow a little more slowly. You have to analyze the value of that stock a little bit closer. But if you can get into a dividend stock at a good price, a good valuation, and you stick to dividend stocks that consistently raise their dividend payout over time, then you're actually going to see much larger and much more impressive returns from a dividend stock than you might think about at first glance. But all this really boils down to is there's more than one way to make money in the stock market, and everyone's risk tolerance and everyone's strategy is different. That's not to say any one strategy is better or worse than the other. What works for one person may not work for another. Personally, I love dividend stocks, I love index funds, but I also do hold high growth stocks. I do try to hit those home runs and those moonshots as well. So all this video was a really long way of saying you have to know about what you're investing in and you have to have a plan of what you're trying to accomplish. You're not going to invest in a company like McDonald's and expect huge growth every year. But on the other side of the coin, you're not going to invest in a company like Tesla and expect just steady, consistent gains. You know when you're investing in a growth stock like Tesla, there's gonna be some wild ups and downs and you're gonna have to ride out the storm. So there's a trade-off with each type of investing you may consider and each type of investment you may invest in. And it's up to you as the investor to know what those trade-offs are before you jump into an investment or just pick a strategy for yourself. And that's what I aim to do here on this channel, is help you make better decisions for yourself. I'm never going to tell you that my way is the only or even the best way to invest. It's just what works for me, and I hope through these videos I can help give you the knowledge you need to make those kind of choices for yourself. So if you like this video, give it a thumbs up down below. It really helps the channel out. And if you want to learn more about investing from me, check out these two videos right over here, and I hope to see you there.